Hello everyone, Andrew here from NFX Trading Academy. In this quick video we're gonna talk about premium and discount zones and how we can use them in our trading plan in order to increase our profitability and also avoid unnecessary losses. First of all, I want to thank you guys for the support that you gave to the channel in the past few weeks. As you probably noticed, I started uploading way more often for you guys in order to help in your trading journey. First of all, I want to talk a bit about structure and runs and pullbacks in the market. In every market phase we have runs and pullbacks. Runs are usually going with a trend, so if price is bullish, then of course the runs are gonna be breaks of structure to the upside. If the structure is bearish, then the runs are gonna be breaks of structure to the downside. It's really simple. We have a really simple schematic that you probably saw a lot of times. So we have higher highs, higher lows being created in the market and having breaks of structure. But what we need to identify is that whenever price is making a new high, this is called a run in the market. It's called a run because price is running towards the recent high in order to break it and create a new high in the market. Same thing in a bearish structure, price is running towards the low in order to break it, create a break of structure and create a new low in the market. After every run in the market is done and after we have that break of structure, so after we have the break of structure and a new higher high being created for this example right here in a bullish market, we will also have a pullback coming into the market. So the next phase in the market is the pullback phase. Now this structure right here can be on the daily, it's usually on the higher time frames because we're going to talk about internal structure in the next slide as well. But looking at the bigger picture, usually on the 4-hour or the daily time frame, we see really clear market structure. We see higher highs being made, higher lows, higher highs, and so on. And on the other side, lower lows, lower highs, and lower lows. So every time a new high is being created, a new run in the market comes, then we can expect a pullback phase. Pullback phase in order to retrace, mitigate some of the areas, imbalances, POIs, supply or demands, doesn't really matter, in order for price to gain liquidity to start the next run to the next high or low, to the next break of structure in the market. If you understand these two simple concepts, then market structure is going to become way easier and you can start trading high quality setups while avoiding unnecessary losses. On the next slide we have a small schematic for the internal structure in that higher time frame structure. So here we have a bullish structure, higher highs and higher lows, creating a new higher high in the market. Now from this point to this point is a pullback phase. This pullback phase is drawn on the smaller time frame. Why? Because internal structure is usually on the smaller time frame. So if this is the 4-hour, for example, with the blue dots, then our internal structure is going to be on the lower time frame, such as 5-minute or 15-minute. This is where most people and most smart money traders or retail traders get confused because they do not understand that internal structure has nothing to do with the higher time frame structure and what price wants to do. So once we create that new higher high, in this case on the higher time frames, and we can expect a pullback, we can start looking at the smaller time frames in order to execute a counter trend trade. Be cautious because usually in the internal structure you also get a lot of fake outs. A lot of fake outs because price is pulling back, but it's also in this case really bullish. So you want to take sales but price is still bullish. What it does, it creates a lot of fake outs. So we can see here drawn, you have a change of character to the downside, you have a small downtrend, then price creates a new change of character to the upside. This fakes you out that price wants to start moving higher, then creates a new bearish change of character and then starts pulling down, and then it finally creates the low in the market, and then you have a bigger change of character, a retest, and price begins the next run to the high to create that break of structure. The easiest way to avoid losses in the pullback phase is by using the premium and discount concept, which is really simple. This concept does not require a long video, just gonna keep it short and to the point. So once you identify a pullback phase and also once you identify the new high being set from here to here, you can start by using the premium and discount tool in order to find out the best area to wait for price to pull back in order to take pro trend, in this case buys, with the flow, with the order flow, because it has a higher chance of being a winning trade. But that can also help you in getting into counter trend trades because you know where price can pull back from. So let's go to the next slide and we can see that we have it drawn right here. So the same schematic, but now we have the premium and discount. What premium and discount is a simple concept where we have the 100%, the 0% and the 50% right here. It's an easy tool to use. You can use it by I'm just going to show you on the charts really quick after, but you can use either the Gantt box or the Fibonacci tool to draw the premium and discount. At the 50%, at the equilibrium pricing, how it's called, the fair value, is where you don't want to take trades. That's not where we are focused. Where we're focused is between the 50 and the 100 and the 50 and the 0%. Why? Because this right here is the premium and down there is the discount. So once we have the new break of structure in the market, once we have the higher high confirmed, we have the higher low right here, and the pullback phase begins, we can draw the tool from down here all the way to up here. And now we're gonna have the premium pricing, which is expensive for buys. We do not want to buy here because we are near the highs, so buys here does not really make sense. What we want to wait for is for price to return into the discount pricing, which is basically the cheap pricing where we want to take buys from. So this is where a lot of traders go wrong, because they want to take buys here where price doesn't really make sense to take buys from, because we are still in premium pricing, expensive price, because we are near the high. Instead, if we wait for price to return to the cheap prices in the discount zone, we can take buys here and we can use our risk in this area because it has a higher probability of being a winning trade instead of trying to take a trade right there. If you understand this, it's really simple, it's just basic economics. You can really improve your trading and stop taking unnecessary losses. So once price comes into our discount zone, into our cheap zone, then we can wait for price to realign, so we can take some buys from anywhere around here all the way to the premium pricing, where we're basically buying cheap and selling expensive. It's that easy. Also, once we have the confirmed, but this is more risky because once we have the higher high confirmed in the market, we can use the tool in order to identify the premium pricing, and we can take sells in the premium pricing again to aim for the discount pricing. So basically we sell when it's expensive and then we buy when it's cheap. It's that simple. Once you understand again how to use this tool, if you use it on the higher time frame, it's way easier to execute trades. So let's move on to the charts and I'm going to show you a few quick examples. So the tool I use for this is actually the Gantt box. You can use these settings right here. If you go over to style, you can use the 0%, 0.5%, 1%, background and everything like that. Doesn't really matter, but what it does is actually draws a box from the 0% all the way to 100% and a middle line, which is the 50%. So if we go, let's find an example right here. If you draw the Gantt box from this low, for example, to this high right here, you can see that price had a bullish run and then it began a quick pullback phase where price spiked into the discount zone before going back into the premium zone. This can work on any time frame, so even if you use the 15-minute, you can use that for smaller trades. So every leg is like a Fibonacci tool from the low here all the way to the high here, and you can see that price came into the discount zone and then started pushing higher. So instead of looking for buys in this area, we're waiting for price to come into the discount zone, wait for confirmation and then execute buys from there to take out this high. You can find this on again any structure. That's why I'm not even showing the time frame, because it doesn't really matter. You can use it every time you want, from a low to a high. Even here, if you have a small push, we wait for price to pull back into the discount zone. Here we also have a valid demand zone where price touched. If we go down on the time frames, we probably see some confirmation to take this buy. And the first target, if we use the premium discount tool, is always the high. Why? Because it's easier target to acquire, and then you can use the higher time frames in order to identify a better target. Let's look at on the 4 hour and see what we have here. This is a perfect example right here on GBP USD, where you can draw from the low right here all the way to the high that was set in the market. First of all, it was like this, but price did not come into the discount zone, and what it did instead is create a new higher high. So now we can move it from all the way down there to here, and you can see that price came back in the discount zone. So buys in this area don't really make sense, because we are basically trying to buy near the high when it's expensive. Instead, what we want to wait for is price to return to the discount zone, which is this area. We wait for confirmation here. We start adding confluences such as a valid demand zone, a POI, a change of character on the smaller time frames, and then we can execute buys from there. Because even if we take buys from here, our stop loss is gonna be lower and our target can also be the high, which again, this is not a good risk reward. That's why we use the smaller time frames in order to have a tight stop loss and a bigger risk reward. You can also use the Fibonacci tool for this if you want. You can just use the 0, 1 and 0.5% and use that as a premium discount tool, but I like to use the Gantt box because it's just nicer. As I said, there is no need to go more in depth with this concept. We try to keep things simple because trading is simple. What is hard is actually controlling your emotions and your psychology in order to become profitable in trading. If you use simple concepts and don't overcomplicate them, and you add them to your trading plan as a confluence, if you think they're gonna work for you, then again, you're gonna make trading a easy to follow system, and then you can start taking profitable trades with no issue whatsoever. Saying that, thanks for watching. Don't forget to like this video, subscribe, and leave a comment down below, and join the free Telegram group. The link is in the description, and I'll see you guys in the next video.